financials are fragile, watch it real close. The technicals lagging, that shit a joke, this shit a fact. I'm not trying to boast, I got me a straddle, played on both. I always watch candles, come get the smoke, yeah.
All right, ladies and gentlemen, got your watch list coming into August 13th, 2019. And from today, the stock market is going to get extremely volatile. Now, that can mean up or down. However, there is a lot of things pointing towards the downside, and there's a lot of things that occurred today from technical levels we closed under, technical warnings like the down Friday, down Monday, and then mainly, in my opinion, all of the geopolitical stuff. So I want to go over the main things. I got your keys for tomorrow. I got your plays to watch, and then I also have the plays that we made today. I grabbed 100 SPY puts, and I made a move on TLT, and I want to explain that so you guys could have a better idea of what's going on with those plays, and so you could get ideas of how to play during this volatility. And ultimately, you'll see with these plays, protect yourself, how to roll the money you've made from past trades into more upside at the same time while protecting and locking in your gains. So before we get into that, you know what you need to do. You need to make sure you're subscribed because we post these watch lists every night. You need to make sure you got your thumbs up on the video. Make sure you have your alarm clock set so you're there in the morning. We are live Monday through Friday, 30 minutes before open. I just messed that up. Oh my gosh. But it's pinned in the comments. It's pinned in the description. And lastly, the most important thing, you need to post your watch list below, my friends. Please, we got to source that info and source it and call out those plays in the chat, baby. So getting right into it, the keys for tomorrow. The first thing is this is the second down Friday, down Monday in 2 weeks. Now, this technical signal, besides closing again below the levels that we gapped down from on Friday, there it is right there. We closed just right below or right at that level. It's setting up that range, and that's what I said we were looking for last week. But beyond closing and a lot of other main indexes like transports closing below those key support levels, the down Friday, down Monday is pretty much signaling either a top or a bottom. We got that last week, and then we had it triggered again. And usually now, this is one of those warnings that says in the next 14 days you're going to get volatility, but that is not why I'm titling that for this video. There's one thing that I really believe is the most important thing that is kind of giving us a card that, hey, there is more volatility, and I think it's pointing more towards the downside. But the effect of a down Friday, down Monday, it doesn't happen often. This is why I like this indicator. It is very technical, but the logic behind it is there's very few instances where investors take risk off into the weekend on a Friday and all the major indexes close red, and then they continue selling off coming into Monday. Now, that's happened 2 weeks in a row. Once we start, this is why we use VWAP. This could start even showing outflows, and we're going to start seeing, especially with what we saw today, and this is a hugely important thing, bonds, but you're going to start seeing inflows and outflows. And again, that's why we said on yesterday's watch list, watch the value stocks and see what sort of moves they make, because it could tell us a lot there. But that is the first thing. But the main thing that is going to cause volatility, in my opinion here, is the Argentinian Peso. Argentina, boomba, boomba, boomba. That's a hit song, you guys. It's on iTunes. You could download it. But the thing about the Argentinian Peso, or Argentina, I say it wrong, but this is a big deal because, like I said, with China, when we were discussing the whole weakening and how the government was letting it come to that level, U.S. labeled them a manipulator for not stepping in. In this case, what happened with the Argentinian Peso, and I'm sorry if I keep butchering it, I really am. There it is. It says yen, but this is the USD ARS. This is the Argentinian Peso. And now the key with this is that there was an upset in an election, and it led to pretty much panic, more or less here, or any upset could cause this with financial markets, especially one politically like that. But the key to watch, and I said this, I said China in essence floated their currency, but I said watch for any other country to float their currency or a massive weakening by another country, because now, usually when that happens, this is my own indicator I've created. Usually within 14 days, 14 to 21 days, you are going to see massive amounts of volatility because of the ripple effect. But my idea, my logic behind it is that it is the government's highlighting that they understand we are entering a volatile moment. Now, you may ask, if this was a political upset, how is the government in control? Isn't this just people reacting? It is. But the key to notice is how much they've let it devalue. And now the Argentinian peso is devalued tremendously, even in 2018 already. But again, it's pretty much done what it did in a whole year in one day. And the key is you could even see how it's moved. It went up to a certain level, and then now it's kind of came down, and that's a substantial move if you really put the numbers there, especially for a currency. But the fact that it's holding up around here now, and this is my theory, is that when a country floats like this, but again, even though this was a reaction from the citizens and again, global markets and everything else, there's a level to which the government decides to support the currency. This is what I was saying with the Chinese yuan last week. And why I anticipate volatility is I think they are aware that current markets are showing them it wouldn't make sense to support the currency at a lower level. How come they didn't step in and use their reserves to weaken it up to 47 and start buying their own currency? They let it pretty much appreciate or depreciate to this level, and they choose a level that is, again, if it's substantially weak like it is here today, they decide, okay, this is where we're going to step in, because that would make the most sense from a risk management basis. Otherwise, they don't have the reserves to continually stabilize it. And again, if we see more weakness, that could be telling. But that's literally just one of the events happening right now. But now back to the keys. This is related to the European debt crisis, which some would say started in 2015, and there was fears of this in 2010 and 2011. But again, the situation there is not good. I brought up Greece on stream, and it was the same time. China was doing bad in 2015. That was Greece as well. It was China and Greece as far as Europe was concerned. But now we have the Brexit coming into Europe, and then also today there's talks of Italy. So it's the Italy version of Brexit. But all this is no, not good at all. Not good at all, my friend. But that is my theory here, and I'm going to keep watching it. But I am suspecting, again, with the down Friday, down Monday, putting this into play, I am suspecting more significant downside than upside. However, I will, I did grab one call play. I am going to be focusing on the plays I do want to hedge myself with, but I am looking at more downside here. There's that. And then also today, the 2-year, 10-year spread collapsed more than it really ever has in the last few weeks. And I guess up until we saw the Fed. But this is important now too, because I made that video. If you guys didn't see it, I said exactly how the stock market is going to crash. And the biggest thing, this is my full-on bear signal. Once the 2 and the 10-year invert, and then if the futures start pricing in a rate cut, the minute we get a rate cut after a 2-10 inversion, I think that's it. That's my true signal for a recession, and that the economic climate is really going to shift more towards a slower pace of growth. So watch that. Watch what the bonds do. That's even related to TLT. But then if you guys didn't remember last time, usually it goes bonds and then gold. So again, we didn't even make a play on SLV. We're going to go over those in a little bit. And again, there was a bunch of other stuff, really the geopolitics with today. There's the Hong Kong and the airports. That's at a boiling point. And a lot of people think that could be a black swan. And I think it's going to have some level of effect, but it's a different type of effect. And there's so many more financial things occurring right now on a geopolitical scale that could have a bigger effect. But depending on what happens there, it's going to bring about even more negative future implications, I think, further down the road, not necessarily right around this time. So there was that. There was even, Trump said something about the Russian, there was a nuclear leak or something. Again, they had that crash a few weeks ago with the submarine. There's more tensions now, even with Iran. There was a lot of stuff that happened. Even Epstein has stuff to do with this. All the geopolitics going on right now is pretty bad. It's kind of surreal that it's all occurring right here, right now. And again, I'm really the two things I'm looking for. I want to see how this currency war and again, the levels of everything from now the peso to the yuan and now ultimately the dollar, but then also now the bonds in the 2 and the 10-year, and then what happens there, and then finally what the Federal Reserve is going to do. So there's that. And then also lastly, we saw glitches today on the exchanges. So I had 2 platforms up. Every single one of my platforms from E-Trade to Tastyworks kind of did this, and a lot of people in the chat reported it. There was just a break. You could kind of see it if I put up, I think, Boeing. There was a moment through the day where it just was crazy. It was very, very low. There wasn't even trades going through. And even when I pull up the daily chart today, yeah, here it is. You could even see on the SPY, no volume. Honestly, this was a weird power hour. Some people reported issues on ICE. Some people were saying that. I didn't see any confirmed technical report issue from the NYSE or ICE. They would put that up there. However, I don't know the timing necessarily, but I think that was very suspicious. But at the very end of the day, it just makes me want to look towards volume and liquidity and how that is going to operate in, I guess, I think the VWAP is going to be a very, very crucial thing here coming in the next few days. But also, monitoring inflows and outflows, and we're going to keep our eyes on that. So now that we got that out the way, let me show you the plays that I made today, and this will just start what I did so we could do it, and I'm sure you guys want to see this. I bought 100 SPY puts, but now I link this to another play more or less. So if you guys remember, we had those TLTs. That play has been awesome. This is the one I put in the watch list maybe almost a month ago now. That was or actually, no, we got it like July 29th or July 31st, something along those lines. But we already cut out a little bit. Remember, I've taken profits on multiple ends, but now here you could see this $125 total cost has turned into $4,900. So that was an awesome play, but what I did with it, I sold premium on it today. So now think about that. I've already cashed out another $600, and that's not even that's just on this account, not including the other plays we made on the different accounts there. But I bought these SPY puts, and I bought September 16th, 240, 235s. They're about 2.5 standard deviations out of the money, so it's a little bit further of a move, and it was $800 total. That is definitely a big amount. And you know, it's a $5 difference. If let's say the market did go back, and if it did retrace October lows and come back down to that 238 level, these should, or even 235, depending on how fast it does it, this will net off of $800, theoretically $50,000. Now, that's a very low probability play, but I figured I wanted to let it ride with kind of what we have here, but everything has been financed. So what I did is I sold TLT 149s now. So remember, we own those September 145s. We paid $125. They're worth $5,000. That's what I'm holding now. They have a lot of time, so I want to keep holding them. So what I did here is I sold now 25 of the 149. So they're $4 difference. So that means every contract will make me $400 off of 25 contracts. So you do the math, that would be $10,000. So if by selling this, I sold 25 of them, so I collected $2,500, and because I sold them at $1 piece. So now I shorted this contract, collected $2,500. If TLT retraces and comes back, I'm walking away with that $600 we already took, and I'm walking away with the $2,500 from today. So I'll still make off of that initial $125. I will still walk away with $3,000 no matter what, guaranteed now. And now if it shoots up even more and goes crazy, I won't have unlimited gains, or I won't get in the money on 25 contracts. But if it goes up to 149 where I sold the contracts, I'm guaranteed $10,000 off of $125. I will take it. Let's go to the bank. So I made that a win-win. And now by doing that, I figured, okay, well, let me go find some cheap SPY puts and reinvest some of that money now, and I could take a bigger risk on a lower probability play that hasn't popped off yet, and that's why I bought these. So understand, if I didn't have, play money that I made with from the past, low risk trade, I probably wouldn't have taken these. So I will take these trades once things confirmed. And again, I just utilize this spread, and you could do the same thing too. And the best part is, as time ticks off, if during this climate, if tensions boil down in any way, then boom, these are going to be worthless. But again, it's still calculating what I'm walking away with. But I took $3,000, put in $800. I put in about 30% of that value, put in a third, and then I walk away with the rest no matter what. So there's that play. I did take, again, just in case for volatility, I took a 2-week out spread. This was like $59. This is, again, about 2.5 standard deviations, way out the money. They're probably not going to hit, but this is in the event of a volatility event. I wanted to sprinkle some of these events because it seemed like some of these weekly and shorter term plays got cheaper ever since we did the bounce and that little dance, kind of bringing everything up. So I got that. We did the TLT. I wanted to play on Melly again. This one has a lot of time, and this is playing the Argentinian thing, and this is their Amazon. They went up a lot, and a lot of people said they have good financials. This is, again, just a volatility play. If there is any sort of crisis there and things in the euro get bad all the way down to Argentina, this could be very bad. But I got to pay $40 for a contract with 220 days. I'll take it. And again, if there ever makes any moves, we could always take the profit on one end of the spread. We could turn it to a butterfly. So again, with the $40 on that related to Argentina, and most Argentina stocks dropped about 50% today. Melly only dropped 10%, and it's a $600 stock. So options with a lot of time, this is my favorite right there. But again, it's all about controlling the cost basis. This is my favorite. It's like my favorite shitty low probability play, if that makes sense. There's that. And then lastly, I got silver. I spent $100 on October, and I messed up on these. And we saw it today. A lot of spreads weren't getting filled, and this was kind of bothersome. But I could have got this fill instead, but it wasn't working if I did the spread in one trade. So I ended up getting this one right here. I spent $2 net credit. I bought 50 23s, sold 50.24, so I think it's still like a 5,000 or off 100 contracts. It's like a $5,000 gain off of 200 bucks or something like that. I'll take that off of silver. I usually don't really expect much out of it. But then you could have got for the same net credit, I did it here, you could have got the 21.22, which is I think a lot more realistic, but all you had to do it on separate legs, but it was the same thing accomplished. So I made those trades. Another trade that I like today, Nvidia earnings is this week. I got a September 20th 110 put for 54 bucks. It's a little further out there, and it's kind of playing both time and if they have a bad earnings, because I already have one of the more shorter term contracts that's already depreciated a lot that covers earnings. But again, if there is more tensions, assuming they don't do good, or some of these chip stocks have really been a toss-up, I like that one a lot. And then another play, this was a buyout or a potential buyout today. I got filled on it bad, but the contract, I don't know if it was because the volume stuff and move, but I'm going to keep my eye out for this Peggy, but I got a bad fill. You guys could come in there a lot cheaper now. And then lastly, I think on the Robinhood account, I made a Apple play. Well, I grabbed another Boeing spread. I grabbed weeklies here. I think I spent 34 bucks for a weekly 315, 307. So it's 30 bucks for a $700 50 max gain, or $750 gain. And then I grabbed this Apple 180 put for next week, or August 23rd, and I got it for 60. It's already came down a lot, but I think Apple is pretty much, it's held up, and somebody said it's either really strong or it's about to take a blow. I think if the market does start going down with stuff, Apple is still at a very, very good range to take advantage of, and it has more downside with that. So those were the plays I made. Hopefully that helps you guys. And now tomorrow I'm going to be watching more Apple. I want to look at FXB. This is the currency ETF pretty much for the pound. It's hard. The low liquidity is hard to get an option play on it, but I'm looking for them on the downside. Also UUP as the drop. For the or going up for the dollar. That one's a little hard one, and again, little liquidity is making it very, very hard unless you want to just go straight up. And I think I might have to do that. If tomorrow plays out pretty negatively, depending on what we see, I might go for that just on one end, not do a spread. And I'm talking UUP here, the dollar. There's Melly, as we talked about. I like that one a lot. I grabbed a McDonald's call. I forgot. I grabbed a 222.50 for 25 cents on the weekly to hedge some of the other puts I bought this week, because again, we said it yesterday to just keep your eye out for them, and they dropped a lot. But if they're still holding above 215, 217, I think that's pretty strong. Watch AMD. We have those puts, and if it keeps dropping tomorrow, we had a good 11 out of 11 call. I want to see if I could make that play free. It's up 40-50%. That September one we got already. And again, if there's more volatility, that will be golden. We said watch Apple again, kind of their strength and weakness, but even from the contracts last week, the shorter term contracts, the August 16th, 23, that's why I picked them up. Some are kind of expensive to a degree, but they're substantially cheaper than when there was a lot of volatility last week. So if that volatility returns, those could be good. And then Amazon as well too. It's low-key hanging out around these levels where it gapped down again, and it didn't really go up too much. So watch out for that. I really like that play. Again, it's just harder to find and more expensive. Keep your eye out for Boeing. We made that, and I think they're still at a crucial level, but we have to see how they play out with everything else. But I think they're going to be a good one. TLT, we sold that play. I still have a lot of contracts expiring this week now on the August 16th. We had that 138, 141 spread. I have my final contract there, and then I have 5 142s in the money, too, off of a butterfly that I weighted towards the back end. Some of you might remember this one. This one's old, but this is a very old TLT play. I made this months ago, and I did it on the butterfly, and I said, get TLT with time, and then I weighted it here towards the top, but I'm up on that. That's another 600 bucks there that we could even take if we wanted to sell out, but that one is going to be contingent on it closing in the money here above 142. But again, if it does fall back to 136, I would still lose on my my other August contract that I have on the Robinhood. But then at this one, I have 5 contracts at 134. If it closes at 136, I collected 600 premium. This would expire worthless, so I'd collect $600 here. Even though I would lose it here, we would lose the gains here because these would expire worthless. But then I'd have 5 contracts. That would be $2 in the money. That would be another $1,000. So I'd make about 1,600 bucks if it closed right there. So I think that butterfly will be successful. If anything, I might even get some puts to even protect this. But again, I have a lot of protection all the way around on TLT. We finessed that. We've maintained the pony.
Oh, how do you do that?
I just showed you. But watch those. Watch TLT. Watch SLV2 and GLD tomorrow. if there is more volatility, watch if the market does go down. TLT and GLD might go down later, and they might make their move the following day after. So that's what I'm waiting for. And if I could do something with that bad fill I got on the first spread, I might try to play around with that. Watch Walmart after their earnings. I think they could be good. And if they, again, they have an earnings premium right now, but they're going to report this week. After they report, depending on what they do, they could be a good follow-up or continuation play. Watch Facebook as well. I was kind of even looking them for the bounce, but they're still kind of expensive. And we have those spreads, and those spreads are pretty much, some are down 20% from what we bought them last week. And depending if you bought them a little bit later, remember I averaged on those. Some are really just holding up their value right now. So that, especially when the market was dropping earlier. And then NVIDIA, like we said, again, they have earnings. They're related to the chip makers. I think they're going to be one that, they could even go up a lot too, depending on if they really surprise. But I'm pretty bearish on this one. So watch that. Watch Peggy, like we said. Watch Amgen. They just killed it today. They went up. That contract we bought for $5. It's still holding around like I think either $80 or 100 something. That was good. Watch GLD and then beyond. Oh yeah, I forgot Eli Lilly too. We brought this one up yesterday. This one had a run up at close, so keep an eye out for that tomorrow. And if you guys see any of these healthcare stocks showing, this insulation doing their thing, call them out early in the morning, especially. That's usually the best time to get them. So watch that. And then lastly, Beyond. Beyond was a safe haven today. That is crazy. It's not dropping like we expected. So keep your eye out for that. And again, watch how it moves in these moments, or watch when it stops acting as an inverse really to the market. So that is it, my friends. Post your watch list. Get ready. Keep your head in the game. Remember, it's better to be late than wrong. Control your budgets. Control your finances. Understand none of this is a recommendation. Please consult with a financial advisor. Option trading is extremely risky. You can lose all, if not most, of your investment. The Colt loves you. We are live Monday through Friday, 30 minutes before open. Make sure you subscribe. Post your watch list. Let's go.